On today's CoinMarketCap episode, we take a visual look at some key Bitcoin metrics as we start 2023. So Bitcoin's 2022 chart is a sea of red. If you bought Bitcoin in January, you had a last opportunity to get out in April and May before the Terra UST collapse crashed the price for good. And the fallout from that took Bitcoin to around $20,000, where it traded for a few months before the next leg down from the collapse of the centralized exchange, FTX. Bitcoin peaked 3 times above the 2-year moving average in bull markets and touched this upper bound again in 2021, but its price has now fallen well below its 2-year moving average, a telltale sign for a bear market. Experts in crypto Twitter are divided as to whether the bottom is in for Bitcoin and the crypto market in general. In the past bear markets, Bitcoin hovered around this range for 1 to 2 years. So could this be a sign for things to come? Bitcoin address count, small and mega large addresses are accumulating. So looking at Bitcoin holders through wallet addresses gives us a glimpse of Bitcoin on-chain activity. The amount of Bitcoin shrimp addresses, so those holding less than 1 Bitcoin, has grown over 3.5 million, almost a 10% increase. Planktons holding less than 0.01 Bitcoin, crabs holding 1 to 10 Bitcoin, and fish 10 to 100 Bitcoin follow a similar pattern. Despite the massive drawdown, smaller holders are more eager than ever to get into Bitcoin. A different picture emerges though for sharks, so 100 to 1000 Bitcoin, and also whales over 1000 Bitcoin. The amount of those addresses decreased by more than 5%, implying that bigger investors may not see Bitcoin as a good investment in times of rising capital costs. And it's yet another picture for mega whales, so those holding over 10,000 Bitcoin. Those addresses mostly belong to exchanges and also wealthy individuals like Michael Saylor with a big Bitcoin exposure. The amount of mega whales went up to over 20%, which could actually point to the richest buying Bitcoins off those slightly less rich. The percentage of old Bitcoin supply in blue, those Bitcoins that were last active more than 6 months ago, remained constant at 75 to 78%. And this can imply that the majority of Bitcoin in holding are held for longer than 6 months and could signify that holders see it as a long-term investment. Bitcoin miners, hash rates are gradually increasing, but miners capitulate. A proxy for network activity and security, it was on a gradual uptrend throughout 2022, more than doubling the year opening 140 million terahashes per second, at its peak in November, over 300 million terahashes per second. However, there was a net outflow of miners' Bitcoins since, resulting in a slight dip in the hash rate and the capitulation of the least competitive miners in the market. In conclusion, the miner landscape is undergoing a consolidation period with an increase in the hash rate forcing less competitive miners out of business. Anyways guys, that's all we have for these insights today. Thank you so much for watching. We'll see you in the next one.